The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Wednesday the 16th of April, mid-month. We're looking at the Dow at this point down 240 at 40,130. If you look at the chart, this is just nothing. It had this little double top. I was talking to Jacob yesterday about it when I was interviewed. I said, always get a little concerned that these markets don't like double tops. Look at this double top in the weekly chart, 45,073. Back in December, then 45,054. Double topping there, and look at that slide to the downside. So I'm always a little bit concerned. You can see I've got a plus on the monthly chart because it's a monthly chart. I have to wait all the way to end of April before I can put a down arrow to say it's a sell signal or sell mode. But this candle so far is quite impressive. Let me go back to the one that I showed yesterday. This is the S&P LV. SPLV is the symbol. It's the S&P 500 low volatility fund. Look at that monthly candle. I mean, that's, yeah, it could turn into a Chapman Wave red Roman candle. And at any point, if this was to close today, let's say this was the end of April, the last day, then I would say in this month, if the SPLV closes one day, usually I take a shorter time frame, it should be a week, but I'm going to go for a day, below 70, it's probably going to test the low. So all of this is really fascinating to me because if you think about it, with all the tariff talk, with everything that's going on, you know, funds, all the time you're hearing about really terrific endeavors that are being stopped through funding. There's a study that I think it was at Harvard going on, and that has to do with TB, and just there are certain things that are really important. But at the same time, when we're looking at the overall picture is saying that within the context of everything that's gone on in the market thus far, for this index, S&P 500 low volatility fund, to be down only 3-4% is amazing. Even if you consider with all the news that's gone on, that the S&P has gone from 6147 to the low of, that was the 7th, was it? The 7th, yeah, to the low on the 7th of 4835.04. Let me put that in, 4835. Now I've forgotten it. Something 4. I think it was 34. Yeah, that's a lot, but look, it held that uptrend line, and the monthly chart has bounced so far. So I'm saying that this is a work unfolding. It's a work in progress, and we have to deal with it in such a way that says, rather than say, these are the numbers that I'm looking at. In other words, the 200-period moving average of the S&P is at 4753. It was 100 points, less than 100 points above that, and it rallied sharply. Rather than saying, oh, the market's going down, and then name a number, I prefer just to get into the right position, if that's possible, and just let it play out. So we've taken our profits, very nice profits in the SPXS, which is the short position. We have a long position in the UDOW, the 3 times long Dow, which has done pretty nicely. I don't know if it'll get stopped out today, but up until now, it's given some nice trading profits. And most importantly, look at the QQQ. And of course, with the tariffs, this is the area that could suffer the most in the sense that it's uncertainty. And when you're building fabs, not for millions, but for billions, that is a real issue. It is absolutely an issue. It's an issue that says, whoa, wait a minute. Within the context of us looking out 3 years, 5 years, we need to know that there's some certainty. You remember the market? People say it hates uncertainty. I say, baloney. Every day it deals with uncertainty. What it hates is uncertainty about uncertainty. And that's where we are. So here we go, down 9 points at 449 in the QQQ. That, because it didn't even break out of the high that was made Wednesday, just a week ago. Does that sound unbelievable? This time a week ago, remember, we were way down here below 420, when all of a sudden the tariff relief statement was made, whoosh, to the upside. Well, you can't just keep whooshing and whashing. You got to be able to have something that says we are sustaining a move up. And so far, we aren't really sustaining the move down, but we're on the very cusp. This is a very important week for the close, going into Tuesday of next week. So let's go to the IWM, the Russell 2000. Russell 2000 down a little bit, down 99 cents, down $1, say, at 185.70. Yeah, also not very good. I don't want to go through the 914 moving averages right now. Rather, let me do this. SMHs, and this is really important, down 7.25 at 195.55. Now that is a plunge. You see that? That's like a dreaded possibility, but it is just arching over from a peak A, got repelled at a trend line. I'm watching this one closely because where the semis go, generally the market is going to go. Now this is really important. Gold. Remember, I talk about gold. People talk about gold in terms of technical aspects. Yeah, there's a technical aspect that is the most important one. Geopolitical economic fear. Money goes to gold. In all countries, huge institutions, that's where the money goes. Gold is only up $86 today, $33.26, $3,326. Wow. Now, I should stick to my rule, which says if it comes off a rally like this, just be a little careful thinking that it could be an alternate count. I do believe it's a B, but I'm going to put in F/B just right at the moment. But that stochastic went to 91%. I just have no choice but to say that was a down arrow. This is an up arrow. There's every bit of evidence that suggests that it's more likely a leg B in the daily, leg D in the weekly, leg D in the monthly. That's gold. That's why we've remained in gold, hardly taken anything off. Question in the den, I'll do it right now. AEM. AEM is trading huge. So you remember AEM, Agnico Eagle, really a fantastic company, gold miner. Look at that breakout. Now, the all-time high is higher than that, but within the context of this cup formation, a breakout, 1-to-1 to the upside says 124.92 right now. I don't want to just do it by eye, but my eye says 128 to 131 is probably an area of strong resistance at some point. Doesn't give you time, it just gives you the price up. Legs C in the weekly charts, they still should go higher. Now, here's a question. There was a peak G at 111.04 in Agnico Eagle. AEM is the symbol, trading up 419 right now at 124.76. However, because that was a G, and there's no other way because that instant restart was taken out right there. This just has to be, with a stochastic at 96%, that has to be a new up move in A. Unbelievable. That means it still has to go A, then a peak B, then a peak C, and a peak D. At least a D for him. Wow. All I can say is, wow. Anyway, that's the way it looks. But most important, let me give you the support. Support is at 118 right now in the short term. I'll be right back. Now it's down to 293. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Let me just move this over here. Got that right. There, okay. So AEM, as I say, is still acting very well. I just had a question about HIMS, which is Hims and Hers, Inc., Personal Healthcare. See, when you're stuck, glued to the 200-period moving average, as it is at 27.75 down to $72, looking out longer term, I don't even see anything shorter term. So looking to buy, I would say that just you've done your homework and you can see some benefit to that particular company, Personal Healthcare. But I would wait. I would actually, if it's a long-term position, I wouldn't want to catch the bottom just to kind of pick it out, because this hasn't really made a bottom yet. And even the weekly chart has turned negative with a 9-period moving average. And it's got a peak D all the way from the 72, almost 73 area, plunging down to 27. That is a huge hit. Look at the monthly chart peak. That's peak D in the weekly, peak F in the monthly. Glued to the 200-period moving average. I would rather wait. And I don't even want to give you a price, because normally I'd say, okay, if it was starting to go into the 32s, I'd say that's a nice turnaround. That's where I feel a little bit more confidence that there's buying coming in. But I don't know where the low is. So I'm saying 32, but who knows? It could go down to 20, 22, and then I'm going to say something completely different. So I'm just going to say I would not do anything. You asked my opinion. I do nothing with this. It's been very hurtful for all of those buying all the way up from about the 55 area to that high of 72.98 back in February. And now, look at the pink 9-period moving average, deflecting lower, deflecting lower. Please, I just stay away for the moment. We'll look at it again a little later. Next question is on the gold and silver. Let me show you silver. Silver's had a very nice move, finally playing catch up to the gold. It's got that resistance right there in the mid-32s. It's at 32. Sorry, is that mid-32? I mean, the low 33s. The high today is 33.175. It's just trying to test that pink 9-period, Chapman Wave inside track repellent zone. And if it starts to trade at any point above, this is silver itself, the continuous contract. This could get smoothed out. The price might change, but the pattern doesn't. At 33.80. If it can get to close above 33.80 for 2 out of 3 bars, that's days, because we're looking at the daily chart, that's going to turn the whole 32.50 to 31.90 area into very strong support. It needs to do that. Then the question came in, CDE. I would like to get into CDE. So we are long this position. It's trading at 643, up 34. This is core mining. Silver, I believe they have some gold. Always put a little bit of gold there. It's up 33 cents at 643. So this is the exact same thing that I'm looking at in the silver chart. And now, just to be a little bit more tactical, I'm going to raise it just a fraction. You see how it broke above? Now, I've seen this so many times. The price breaks above. You think, oh, boy, that's great. I want the stochastic to be in the 80s. At 72%, this is still a work in progress. I've got it as a new leg A. That peak C failure at 684. That's a problem. But most importantly, if it does pull back today, it needs just 2 days. So that'll be today if it starts to pull back, going into tomorrow, and then of course Easter Friday. So you've got Good Friday coming up. So we close going into Monday. I would say by Tuesday, I would like to see 655 at any point between now and Tuesday, but I'd like to see 655, preferably without a pullback. If there is a pullback, it's just a very minor peak A and then a leg B. That's the way I'm looking at it. So the question is, if you didn't get into it lower down, where should the low today is 628? The high today is 651, trading right in the middle of 642. Then all I can say is then start a slightly smaller position that you were going to do. If you were going to get in at about the 636 area, then make it a little bit smaller. It's only, what is it, 6 cents? That's a big percentage, but it's still only 6 cents. So make it a little bit smaller and then make that stop just as was discussed. And then you can start to change the stop as we move along. So yes, get in, because I think silver's playing catch up to gold. That means that gold might be due for a little bit of a rest, and then silver plays catch up, and then gold might have one more attempt at a rally. Then they both take a breather. But at this particular point, as a geopolitical, economic, insurance policy, I've always said gold is the insurance policy whenever there's economic uncertainty, especially if there's political uncertainty. Well, that's what I'm looking at. And silver's just playing catch up. So let's just see. So, okay, did that. Another question came in. Could I look at XPEV? XPEV is the, here we go, is the Xpeng designs, develops, manufactures smart EVs. Yes, pulling back a bit and mentioned that they're a new product on the market, but it's met with a little bit of selling pressure. I think that's market selling pressure. Most importantly, I'm waiting for this week to conclude to see whether I put a down arrow on the weekly chart. I can't really, because it hasn't. The 9 is still very strong above the 14. But the one I like the best out of these is BYDDF. That is the bid company. This is the ACE shares, and it is the Chinese EVs. They do Chinese EVs and batteries. That's the most popular make. So that's the one I think, to me, has the most upside potential. But right now it's pulling back, and we do not have this in the portfolio. Always a little nervous about that. Wait a minute, whoa. Oh. Well, I'll have to call them back. So in the meantime, back at the ranch, as I'm looking at this, FXI is pulling back. It was doing better before, remember, but only a little bit. But the 9-period moving average is still pink. It looks like it wants to deflect lower. So I would just say, please be a little careful. All right. So for portfolio, for subscribers, to my opening call, we've got 2 new positions. One is in the insurance industry. So KIE is the insurance, this is the S&P Insurance Fund. The overall portfolio, the mix of this shows that it made a peak C in the monthly chart, and it's got a candle midway through the month. It's got a Chapman wave red Roman candle, but it's actually a pretty decent when you think that under all these conditions, and then of course there was that terrible continuous fire in the LA area, and they're going to have to rebuild. But at the same time, you know that when these things happen, very often what you get is the insurance companies have an opportunity to bump up prices. I don't know why that is, but that is. And I don't know, maybe that's the way they're looking at it. But I didn't want the insurance area. I wanted the high risk. And I don't know if it's going to work out, but it seems to me I'm trying to find for subscribers under the radar, for those people who do feel that they want to have some long positions, I want to find something that is under the radar in the sense that maybe tariff is not really going to affect them, maybe pricing, they have pricing ability. I think that's kind of the way I'm looking at it right now. We'll see. Talking about that, let's see what CVS is doing. CVS is up 53 cents. Yeah, they have a little bit of pricing, but I think it's the failure of Walgreens. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
I hope I haven't skipped anyone, but the next question came in from Tiger YouTube about PPTA, a miner, and I think it's called Perpetuous Resources Corporation. I can't actually see that far right here because TradeStation has the printing tiny and in gray, so it's also probably my eyesight. But anyway, it did go down from 13.40 back in 2020 in a single leg A to the upside. This is the Eiffel Tower where it goes straight up and then straight down. Actually, it didn't come straight down. It took a long time to come down, but it went low and low and low and low. It did not take out the low of 2020, but it did go down to about 1.70 or so. Now it's trading at 13.30, and that was the low in 2022. And it's peak A, peak B, C, D, E, F, and I've just done a Chapman wave. Whoops, I should have done it the other way around. I did not see that. Usually you go to the penultimate trough, and that would be there. Oh, okay, that's a little bit different. I was wondering about that. Yeah, that takes us to by June, it should test 13.40. The way it's going, 13.40 today's high. No, it can't be 13.40. That has to be 15.50. I thought to myself, something's wrong with this. 15.50. Talk about eyesight, huh? 15.50. The way it's going right now, I think it'll be in the next week or two or three, where it starts to get, in other words, April, maybe early May, where it starts to get into the 15s. This is the way it's going right now. Yes, I like it very much. PPTA is the symbol. If I have got the title wrong, at least I've got the symbols right. And I believe this is a new leg B in the weekly chart. And I'm calling this an F/B in the daily chart only because it did everything correctly. It did a peak D and then everything came down sharply. And then it gave you an on-balance volume buy signal. So this is in a buy signal right now, almost ready for a buy mode. But at 94%, I just have to consider that it's in a buy mode. And that should be a B. So that's E/A, F/B. But the way it's acting, remember, this is almost the same resources. So it's the same chart pattern that we've been looking at these gold and silver stocks. It's a huge move to the upside. What do you call it? So all I can say to you, rather than the upside, because it's still very strong, let me just tell you what the downside is. And it's halfway into this big candle of 3 days ago, and that's 12.70. If it closes under 12.70 in the next by Tuesday or so, that's a problem. That means that it really is probably going to be stalling for a little while. Right now, it's showing strength. So I hope that helps you. Next question was, could I look at did that MAG, M-A-G? Oh, I haven't looked at MAG for a little while. I haven't even notated it for a while. This is Majestic Silver Corporation. Really nice move today. It's at MAG is trading at 16.09, up 32 cents. So here it is, a leg A. This is a very strong leg A, and the stochastics at 68%. I prefer to see it over 80%. So I'm calling this a gray A, only because I haven't got a confirmation that it's a buy signal yet. Come on, there you are. Okay, gray, and I changed that notation from blue to gray, and that always indicates that we haven't got a buy signal. Once we get a buy signal, then we want to be upgraded to a buy mode. And if you're looking at the weekly charts, and let me do the same thing here. Here it's a little clearer because we've got a trend line from the weekly chart, peak A, B, C. C is still in place, but underneath it you've got some. So this is what we're looking at here. We've got inside track, repellent zone. I'm going to put that in as this week it has to break 1704. That means by tomorrow's afternoon. And next week it has to break a little bit lower down because it's a declining trend line, 1702. So far, this is good action. Today, the 9-period moving average has crossed positive for the first time in a little while. But the day's young. It's a daily candle, so I have to wait for the close. But if that's the case, then it's 1611 right now. 1557 to 1530 would be key support. If it breaks that, then you're going to have to take a little bit of time and say, and now it has to rebuild strength. And as I said, at 68%, I want to see 78, maybe 80% in the next day or two in the slow stochastic. On-balance volume is rallying. MACD is good. Look at this relative strength building very nicely. And you've got so this is positive right now. MAG, what did we say it was? I always forget. MAG's silver, majestic silver, right? Yeah, so that's that one. And next question came in, could I look at for starting a position? So uranium. Now what's fascinating to me, uranium, this is Energy Fuels Inc., uranium. I mentioned to subscribers for a few days now, I'm interested in the uranium sector. We haven't got in yet. UEC is the one we almost always go to. This is acting very well now. It wasn't earlier in the days. Up 42 cents at 9%, up 9% at 504. So at that point, I was looking at it, and when the question came in, I thought is acting much better chart-wise. But you want to know something? They're both doing very well. I think the chart-wise, this strong leg A from 320 to today's high so far is 457. That is a really strong move. Taking out all the left side A, B, C, D, E, that whole buy mode with the dreaded H pattern that took out the left side low. This is the one. So now what do you do? So I'll do the same thing as I said with CDE. Now it's more difficult to get that full position that you wanted, but why don't you start a position, make it a split position with maybe a half right here at 457, and then another one that you might miss, or at least start a position at 450, it's at 458 right now, at the high of the day. I don't like that, but if you're splitting it, then you start a position here. Now you've lost the opportunity of getting a full position. This is my own opinion, because I can't tell you how high it's going to go or whether it's going to store right now, because that weekly chart has a tremendous amount to go to make it positive, and especially the monthly chart. Energy Fuels Inc., U is the symbol. So start a position here, and I would just have patience. And you see, where do you put your stop? So 433 is 20 cents. That's a 5% stop. This is tough, but I would say start a position now, but it has to be smaller than you would have put it in if it was down the 436, 440 area. And then let's go from there. We can look at it again tomorrow, but this is a really nice breakout. Uranium, we're looking at so many. Let me just see. URNM is the ETF. Trading at 31.12. This hasn't broken out yet. Yes, I would just say now you have to start a smaller position, and I would say you've got to give it about a 6% risk as a stop. And let's just maybe do it tomorrow. We'll look at it again on Monday. Okay, I hope that helps you. Basil, Chapman, Tiger Conditions Hour. Now it's down 200.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, remember the market is a very interesting creature. And of course when I say creature it means it's all of us, because if you're in the market you're part of it. What happens at a certain point, it's the crisis becomes a bullseye. But then what happens is if you don't hit the bullseye, it just starts to dissipate and the market gets used to the new vernacular. It just gets used to things and it tries to resolve it in its own way. I don't know if we're there yet, but that's what I'm anticipating happens at a certain point, as long as we just don't get these extreme statements that really just kind of tank the market. So did I finish that IAM? That's IAM Gold, IAM. Was it IAM? IAG. IAG. IAG is IAM Gold Corporation. Yes, big spike today, up 7%, 7.5%, up 57 cents at 8.02. There was a peak C1, C2. Now that you have a choice, this could be a continuation, a D and an E. If it didn't go pink, it stayed green. So right now, I'm just giving you an alternate count. Like the others, I'm saying it's E/B. Stochastics at 93%. That should be a B. The monthly chart is E. I haven't finished the weekly chart. But as ABC, the way I see it right now, it's still very strong. I would prefer in the weekly chart, the stochastic was at 80%. Now, normally what we would do is to say, a bunch of gold calls, gold and silver, we must be getting kind of toppy. That's the way it used to be. I remember with Tom O'Brien years ago, suddenly we had this dearth of calls on gold. There was nothing. And I remember saying to Tom, I said, Tom, is that a sign? Are we getting some kind of... And then, yes, it was a sign because the market in that area started to scream to the upside. And then we started to get 4, 5, 6 calls a week or more, sometimes even 10 or 12. You knew you're getting toppy. This is a little different because I'm looking at this as geopolitical, economic, so there's some sustainability on the fundamental side. But if you're looking at the charts, even though they've broken out, this is a particular pattern that if it spirals up, what happens is that sometimes you can get, instead of that Eiffel Tower or pyramid pattern that goes straight up and straight down, what happens is the sideways consolidation builds strength and then it pushes higher. So I'm not sure if we're in that category. All I can say is that if you have a new position in in the gold or the silver, then you do have to have some kind of a stop. If you've been in for a while, taking a little bit off is just prudent. It's just good bookkeeping. It's good money management. But most importantly, what we are looking at is that it is a place that players and position players are going into because of the market conditions. And that to me is really important. Okay, with that said, I must move away. I didn't even finish. So Bitcoin, BTC is down. Now it's back up. It's up 735. Remember, I said it's in this area here when the 9-period moving average crosses positive. If it can get into the 87,500s, that's like 3,000 points up. That's going to be where I can actually consider that there's a turn in the trend, but right now it's still a downtrend. Even though we're long, we're not doing anything with that. I think it's holding okay. That's the most important thing. High-grade copper. High-grade copper right now is up just 0.03 at 4.655. Let's look at SCCO. Southern Copper took a huge beating the other day. Gap down. Now it's filling the gap. It's trying to form a positive 86.92, up 9 cents. I think it might still be early because it's still more the macro copper, molybdenum, zinc, lead, silver, gold in Mexico and Peru. Anything you name it, they've got it. Peak A, peak B. The last peak B failed and it came down. If you want to get in, I would prefer that you took a call position in a 2-month out call position, or even a month out. That's a safer way to play it. Right now, I'd wait for it to get to, it's 87.01. I'd probably say if the 9-period moving average crosses positive, meaning it gets close to 90, 89.50 to 90, that might be where it really starts to go on an upside strength. Right now, it's just trying its best. Next thing is, so look, Microsoft, this is not great action. It is just struggling. And that just tells me that this tech sector, and Microsoft was holding better than most of those. Look at Meta. Meta, look at that. 740.11 down to where it is right now at 510. It's even been lower than that. It's been in the 480s. This is not good. And that just says to me, when the leaders, the former big leaders, and they're making up 20% or something of the overall market. In fact, people say that the amount of capital in those, the Mag 5 or 7, is equal to umpteen countries put together, gross national product or GDP. All I can say is they need a breather. And I haven't yet seen a real sense. Look, the IBB. This is the IBB's the NASDAQ Biotech ETF made this full circle. We've seen this pattern over and over. Dreaded H is successful, then it goes to an M-shaped pattern, and then it turns down sharply. It's holding okay, but it's not doing great. Where's money going to? Well, this is an interesting thing. There's a stock that we've followed for years. I know that one of our tigers, I believe, still has it in all this time. BKD, Brookdale Senior Living, Independent Assisted Living. Look at this, up 5.5% today, up 34 cents at 6.55. Is this A, B? Is this a move to the upside that can continue? Leg D in the weekly chart. Well, it is a place to hide. It's senior living. It's a REIT, I believe, and there's a thing that goes with the REIT because when you have REITs, it's just, I believe there's a little tax position that you have to declare. It's a little complicated. So some people don't go there, but this is holding very nicely. Is it the whole IYR? That's the REITs. Where did I type that? IYR. Yeah. So the IYR. Oh, I lost all my notation. Pity. IYR is trading up 27 cents at 90.98. Doesn't look great, but it's holding okay. So I'm saying be very selective in the stock choices that you make. You still have to have stops in. If you get in and it looked like it was great and then it suddenly fails, So you move on. You just have to. You can't cry over spilt milk. Most importantly, I'm looking at where did it go? Yeah. So Bank of America is down 51. It had a really nice session yesterday. Earnings came out. It gapped up. Now it's giving some of it back. 37.48, down 51 cents. So even when earnings come out, you've got to see what happens. Look at this big arch formation in the weekly chart of Bank of America, trading at 37.48. So we are still long in the 32s, but I'm watching this one closely. I'll be back in a moment. Dow's down 174. S&P's down 67. I'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I was asked about Apollo Group, Apollo, and what is it called? Did I not type that in? I thought I did type it in. It's Apollo Silver Corporation, trading at 0.25 to a quarter dollar. So 25 cents. And I wanted to add to it. The person asks, so where would I add? Since you've held it for a very long time, I'm going to suggest that at 0.254, have a split add position. I'd add a little bit here, and then I'd add a bit at 2.35. And I would still try to have a stop. I'd have a stop at about 220, say, right now. We can go through it one step at a time, but most importantly, this is acting pretty nicely. The stochastic's only at 74%. Okay, so with that, I'm going to wrap it up. I'm going to hand it over. I just wanted to really quickly go wheat, can't do it. It's just there's no time. I wanted to go through some of the commodities. But in the meantime, the Dow is desperately trying to find some support. I shouldn't say desperate. It's trying to find some support. It's the QQQ and the SMHs that are really desperately finding support. This is still a market, a very uncertain market. Be very specific about what you want. Be very specific about your stops. There are areas that are actually working quite nicely. Hopefully for subscribers, we're trying to find them and use them to our advantage. We'll see what happens next. But in the meantime, I'm going to say to you, stay tuned for Steve Rhodes and all the rest of the programming here. And check out my opening call. Have a wonderful rest of the day. Oh, did I beat the gong? Yes, I did. So let me just do this one quick second. I want to just give you an update here. Yeah, so the Dow's down 151. It's still holding pretty nicely, but I want to see that 9-period moving average cross positive, and it's going to need 40. It's at 40,200. It needs about 1,000 points more at least to really start to build some strength. So it's a work in progress. Have a wonderful rest of the day, and I will see you.